Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. I wanted to talk about the ultimate indicator checklist and how to add those indicators to Kraken Pro. Regardless of the market, whether it's an altcoin, Bitcoin, or otherwise, I've used the same indicators now probably for at least a decade. That isn't to say other stuff isn't helpful. I'm just letting you know what I found very, very helpful after doing my own soul searching, looking for the holy grail very early on. What you're really looking for in indicators is actionability for entry, exit, and stop loss. That's the goal. Anything else is just noise to me and isn't helpful most of the time. We can talk about sentiment and positioning and funding and all that other stuff, but specifically for me, that's going to help, that I found helpful, is this list of like 5 things really. There's a few things on here that are the same, but we'll talk about volume first. I normally don't use volume too much. You can use volume for divergences, but if you want to add this in the way this looks, I turn off the moving averages. Not really important to me. I mainly care about the day-to-day stuff. If you're red-green colorblind, you're of course going to need to change these colors, but for me that works. And I'm using columns here. So nothing fancy or special on volume. What I do like that's fancy and special is a different type of volume. It is called volume profile of the visible range. Let's find it here. Volume profile visible range. So once you click on that one, you can add that one to the chart. And what you will see is a volume profile, not per day, in this case per period, but at price. This can help you identify support and resist levels based on where there's been price activity. Again, you can use this for any market, any time frame, best on higher time frames. This one can be a little finicky depending on how you set it up. This is how I have my row size at 250, volume area at 35, numbers of rows there, and then style. Again, it depends on what you're looking for, but if you're new to using something like this, you probably want to use something similar to these settings. POC is the point of control. That's the highest volume point on the visible range that you're looking at. So that's going to change. If we zoom in here, you can see the POC currently is at 96K. So that is a very important price level where it's resistance if we are below and support if we are above. I really don't pay too much attention to buys and sells here. I'm really just looking for peaks and valleys. Peaks would be support resistance, valleys would be a lack of volume support or resistance. Before we got this drop here, this should adjust in a second. Yeah, before we got this drop, if I smush it all the way to the side, there was a huge valley, right, between, let's say 70s and 90K. So the read there is there's clearly a volume shelf, and we tend to slice through that like butter on the way down, just as though we have it on the way up. And you can see we're right basically at all-time highs here, and we're close to price discovery. There's going to be no price history up there, no volume history up there, and we will discover what that price and volume will be at some point. But until you have that, you of course won't have VPVR. VPVR will require a price previously. And we can look at some problematic areas if we go to like Solana or Ethereum and we zoom out a little bit. We can see maybe some levels to watch, to pay attention to. Clearly the bottom was huge volume. We can cut that out. We can focus mainly on what have we seen in the 100, 200, 300 levels. And you got to adjust this. Sometimes you got to cut off the axis. But we can see there's a little bit of a support there at 140 maybe. If we zoom in a little bit more, you can see it a little bit better. So I tend to focus mainly on near-term price action, like within the last 6 to 12 months. That tends to be the most important. So currently you'd read this as supports around 150 and 100. So if you're bearish, you want to see price below those levels. If you're bullish, you want to see price basically above the current level at 175. And above 175, there really isn't that much volume. For Solana, ETH, similar. You're going to see some volume shelves here, kind of in the thick of it now at that 2500 level. Let's go to the weekly. Similarly, there really isn't that much volume on ETH above, let's say 3000 on a relative basis. This is of course looking on a relative basis. So this is just one way to look for things. Maybe if you're breakout trading a pattern and you're looking for a specific level for price to move, as we might be here, let's say above 2800, the next level based on VPVR alone would be 3300. So it's one way to use that indicator that not too many people talk about generally. We of course have the cloud here. You can type in Ichi or cloud and it will pop up. For the settings on Kraken Pro specifically, this was added recently, leading shift periods. This is how I have it set up. This is how this should look. It's 2060, 120, 30, 30. That's how it looks on Kraken. I, of course, talk about the cloud every chance I get. So it's going to be nothing new in this video, but it is a trend indicator. Whereas VPVR is super helpful for levels, cloud is really helpful for determining if you're in a trend or not. The same thing with moving averages, of course. There might be a better moving average indicator where you can get all of these in one indicator, but for me, these are the most important. The 50, 200, I don't look at this or trade off this by itself, but it's always interesting to see, okay, are we close to a cross or not? How far away from the 200-day moving average are we? Do we look overbought relative to that? Do we look oversold? And we're, of course, getting a cross here coming up this week or next. Will we see this cross and then blast off, or will we see price consolidate, let this cross and then blast off, or will we see this act as support is the question. But so far so good on the 50-200. The 200 is basically a litmus test. If you're above, you're bullish. If you're below, you're bearish. And so it's always helpful to know what side of the 50 and the 200 are you on. The 1050 for crypto specifically, Bitcoin specifically, on the daily specifically, has backtested excellently. AKA, the cross itself has been a great entry and exit. On balance, historically, backtested to like 2012. You will have occasions where chop will chop, and that happens. Would I use this by itself? No. But when you have these extended periods of bear or bull, and you get a cross, you typically see a reaction. It's not perfect. It's not something I'd trade off alone, but it's one thing I was definitely watching here coming off the bottom in late April. So currently we're well above the 10-day moving average. And then the 140, 1400 on the daily, that's the 20-week and 200-week. 200-week, you're of course not going to hit until you're in a bear market, ideally. And we can see the future today here in 2025 with the 200-week at 48K. That's moved up quite a bit since the ETFs have launched. That would be the expected bear market low. Cycle-wise, you can use the 200-week as a level to determine how overbought or oversold you are. Generally, we don't ever go too much below the 200-week, and at some point we reach a distance where we are just way too overheated. But as it stands here, kind of par for the course. And the 20-week is also a more important signal, probably for a trailing stop loss more than anything. Currently, we're above that, similar to the 200-day. 20-week, 140 on the daily, is a great trailing stop loss level. And it's a great litmus test level. So if we're above all the moving averages, we're not bearish. We're above the cloud. We're not bearish. That's just how it is. So for trend indicators, those are great. I'll also throw in the alligator. I don't talk about this one too much, but all this one is a series of moving averages. It's just 3 moving averages. Same deal. Price above is bullish, below bearish. You want a bull cross as an entry signal. So right now, of course, we are all systems go. We can throw on fractals as well. For the fractals, these are the inputs, 2 periods. Again, if you're red-green colorblind, you might want to change these, or you might want to change the icons. But how these work is, if you're in a bull trend, your trailing stop loss is a green fractal. At least that's how I have it colored. So currently that's at 101.5. Again, I would backtest this stuff because you have to trust the indicators that you're seeing on the screen. If you don't trust the indicators, then you're not going to take action. But for me, I've noticed the Williams fractals are really great at trailing stop loss levels. So that's how you pull those up on the screen. Williams alligator, I don't think I have this one changed at all. Inputs should all be default here. No changes there. Some people prefer the faster indicators to the slower. I prefer the slower myself. You can, of course, use the cloud with the Williams fractal, which is probably my favorite trend combination. And again, I would backtest this just visually real quick. Look at the last trend. What did the fractals tell you? What did the cloud tell you? Cloud told you to get long back here. Stay long. We never close below the cloud. Technically, this is always my argument for people who tell me that fractals trigger early. Back here, it really wasn't a breakout. until October 15th, and then of course the election. But pre-breakout, you're going to get a bunch of fractal nonsense. Post-breakout, when you're in full-blown trend, you're going to see these levels that will pop up as your trailing stop loss. Boom, boom, boom. This is what you want to see, right? This keeps you in this whole time. Then this starts to get a little choppy, and it's letting you know things have slowed down. Be careful. You've got a TKC clamp here. So it's really the same situation here that we're seeing now, where we're seeing the fractals get super tight to price. So I like this because it's very responsive to the daily. It's going to be delayed by 2 periods, but it usually doesn't let you down. It usually doesn't fake you out, at least on BTC. Maybe for alts, it's a little noisier, but that's really it. And now the last one I use is Bollinger Bands. This is how I set them up. 20 on the length, 2 on the multiplier, I guess that is. I change the colors a little bit. I take off the background, and I rarely use Bollinger Bands. I don't trade off Bollinger Bands like some people do. I really only use Bollinger Bands when volatility is dead. So I like to use it to decide if we are consolidating. Where are we on the consolidation? Are we leaning bearish or are we leaning bullish? You can see this entire time previously when we were up here, we were leaning bearish. We had a little bit of a fake out there, but when this started to squeeze, you got your answer. You really want to move your feet here, right? That's just Bollinger Bands in the vacuum. That's not using VPVR. That's not using basic horizontal lines. We don't have any squeezes here, obviously, but we are walking up the bands, which is another bullish signal. We're above the 20-day moving average, which is also very bullish. And again, I would just visually backtest this. What does this look like when we are trending, when we are bullish? It is expanding. We are above the 20-day. When things slow down, it's a different story. The great thing about crypto and Bitcoin is when we trend, we tend to trend for a long time. One thing you can do with Bollinger Bands is instead of 20, so 20 would be probably a full month of legacy trading. Crypto, you could probably get away with 14, which would be 2 weeks on the daily. We used to mess around with this a few years ago a lot more. And maybe if you're looking for a quicker signal, you can move down to 14. Maybe it'll catch things here or there. Again, this is really personal preference. I like to just leave it on 20 and move the time frame up and down. But as we sit here, there's no Bollinger Band squeeze. There's nothing really going on. I also like to look at this on the weekly on 20. And this really tells you all you need to know with trend. Are we above or below? And this cycle's kind of been rare, where we've collapsed below the 20 and then recovered twice at this point, 3 times at this point. And we look great on the weekly Bollinger Bands. One other thing I'll add here for indicators is pivots. You can just type in pivots in the indicator box here. And I change these to make sure they're on traditional. Yearly is really all I use. I don't use any other time frames. And then if you want to see historical pivots, you can look at multiple periods back. So this would be 2-3 years back. I really only care about the current year. And you can backtest this as well, but it gives you time frame agnostic. It's just looking at the previous year to determine the current year's pivots. It gives you time frame agnostic levels that, for whatever reason, again, backtest this if you don't believe me, they usually act as support and resistance. So if you're looking for confluence of support and resistance, it's usually some level of moving averages. Now, you don't want to use all these at once. It's the cloud. It's VPVR. And like we did pre-election, we had all the moving averages cross. Like we did post-ETF launch, we had a few moving averages cross. Like we did post-BlackRock ETF announcement, we had all the moving averages cross, right? Those are huge, huge levels typically to pay attention to. Now, you're not always going to see that, but throughout the cycle, it's something to pay attention to. Are all of the signals literally flipping? Because that's pretty significant. Next level up here on yearly pivots is 122. So that's really it. Now, they have a bunch of stuff on here, and I'm sure there's a bunch of useful stuff. I'm sure of it. Copic curve, I heard people talk about that a bunch. I don't use MACD. I guess I do have one more, which would just be RSI. The only indicator I really mess with settings-wise is the cloud and VPVR. There is some argument to be made to double RSI. I think people would hate that because as it is, RSI is kind of slow. But if you're new and like looking for things and looking for signals and stuff just is too noisy for you, I would double it. Just double the signal, so 14 to 28 for the RSI, and just see how it looks. Sometimes it's going to be super early, but really all I care about is the divergences. That's really all I use RSI for. We want RSI in oversold territory or overbought territory. That's where you get the best bull trends. I hear people all the time talking about, oh, RSI hit 75, I got to sell. You usually see extensions beyond that. And that's why it's important to watch for divergences. You're looking for, in this case, a higher high in price and a lower high in RSI, which is what we've gotten at this point. And you can double click anywhere on the chart here and it will just collapse RSI. You can also add other panes. You know, if we wanted to move volume to its own pane, some people like volume above. A lot of what I do chart-wise kind of is related to the videos, and I think it's just easier for people to see stuff when there's not a lot of clutter on the screen. The cloud's a great overlay for that. So I tend to be very minimalist with what I'm doing at any given time. If you're looking at colors for the cloud, I like a thicker Tenkin and Kijun, blue, red. But again, if you're color sensitive, you're going to have to change that around. So after a decade, this is what I've settled on. It's not a lot. It does the job for me. It tells me all I need to know. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.